Back to our top story now. We reported earlier that data from Stats SA shows annual consumer price inflation rose by 7.2% in December. That's down from 7.4% in November. To discuss this further, I'm joined by economist at Momentum Investments, Sanisha Packirisamy. Very good afternoon, Sanisha. So food and non-alcoholic beverages continue to be running at an elevated level. What's behind that? And do you think we face more difficulties in this regard, particularly around food, as the agricultural sector struggles with the constant load shedding?
Thank you so much. I think predominantly what we've seen driving inflation over the course of 2022 was high food inflation, high transport inflation in particular, stemming from the Russian-Ukrainian conflict. And also, we are also seeing experiences of high administered price inflation, still setting inflation higher in the South African environment. Now, going forward, we are anticipating food inflation to alleviate somewhat, given that global food prices have been coming down, given that the rand has appreciated, and given that we are seeing good expectations on the harvest side for local harvests in South Africa. So while we are still experiencing some of the lagged impact of the Russia-Ukrainian war, with things like the wheat inflation still quite high, we saw bread and cereal inflation 20% in year-on-year terms. In other words, bread prices still 20% higher than where they were a year ago. I think that is still in the system, but once that works itself out, we have some good tailwinds that should support some lower inflation going into the back end of this year.
What about the area that we tend to pay the most attention to, the area of fuel? In December, we did see a sort of mixed bag, some price increases, some price decreases. And in January, we saw very definite decreases in price. What's the trajectory that you expect around the fuel price?
Well, in large part, the fuel price is dictated by what happens to the rand-dollar exchange rate, but it also largely depends on what happens to the international price of oil. And we know over the large part of 2022, what drove international oil prices was essentially what was going on with the Russia-Ukrainian war, and that actually left oil prices much higher. And going into sort of the back end of 2022, we saw a little bit of a lull in geopolitical conflict on the back of weather effects between Russia and Ukraine. And so we actually saw international oil prices being relatively well behaved. On the rand-dollar exchange rate, we actually saw coming through was some dollar weakness, and that left emerging market currencies, including the rand, on firmer footing. So while we did experience quite a sharp decline in the petrol price for January, which will then come through in the next inflation reading that we receive, we are looking at a current slight over-recovery for February on the back of these demands in terms of the oil demand relative to supply, and on the back of the movements in the rand-dollar exchange rate. We saw the peak in private transport inflation at 45% in year-on-year terms in July, and since that point it has been decelerating. In terms of the private and the public transport, which is really your bus fares, your taxi fares, we've also seen some alleviation, even though your year-on-year rates are still quite high.
Now, we can't talk about inflation without talking about interest rates. So, of course, next week, the MPC, the Reserve Bank's Monetary Policy Committee, will be making a decision on interest rates. There is an expectation of higher rates. What's your expectation and the expectation for the rest of the year?
Well, this has been quite an interesting one. I think most analysts were predicting a 50 basis point increase in interest rates for this January meeting. But since those expectations were set, I think a couple of things have changed. In terms of the global dynamics, there are now fewer countries that are experiencing an acceleration in inflation. And this is good news. It means that we have seen some alleviation in terms of global supply chain pressures. And especially with China reopening its borders and loosening those lockdown restrictions, we're not seeing the same extent of supply chain disruptions coming through. We've also seen a bit of alleviation on the rand, given the weakness that we've experienced in the dollar. And in our local dynamics, we've seen that services inflation actually dipped for a second consecutive month. And we're seeing that core inflation also surprised the market consensus to the downside. So I think these factors will actually sway the MPC to consider a smaller increment of 25 basis points. That said, I think we are starting to near the top end of this interest rate hiking cycle.
Well, we do hope you're right. Thank you very much, Sanisha, for your insights there. Sanisha Packirisamy, she's an economist at Momentum Investments.